So the question is, how the UK 2025 budget released a few days ago is going to affect you as a property investor. Let's have a look. Today, I would like to talk about what this budget means for you in terms of personal taxation, property wealth, commercial planning. The budget brought about many different changes as usual, but I want to focus on what we do in this channel, which is property investment. So just let's have a look. In terms of personal taxation, there are two important changes that to start with that you need to know about. So the first one is decoupled rates. What this means is that if you have property in your own name, not as a limited company or a special investment vehicle, then the government has done something like this. Let's say you earn £1,000 from your salary, 9 to 5 salary, and then you earn £1,000 from a property that you own, rental income. Now, let's say your tax rate is 40%. On your 9 to 5 job, you're going to be charged 40% on that income. But now they have decoupled the rates, and from your property income, you're going to be charged 42%. Now, there are three bands for this, the same is as property normal income, and is 22%, 42%, and 47%. So effectively, what the government has done is increase 2% additional tax on property income that is on your personal name. The government, again, telling you not to hold property in your own name because there are so many things that you cannot do. There are so many things strategies that you cannot use to extract money in a tax efficient manner. That's why the government is basically pushing more and more people to buy properties in under a limited company. Now, the second change is the ordering of reliefs. Before, you would be able to choose your tax allowance, what would you use it for? But if you have a 9 to 5 job, that means that the tax allowance needs to be used first in your job and then on the income from your property. Now, this change I want to talk about is not exactly from this budget, but is something that's going to kick in 2026 and is going to affect you. And it's going to affect you in a way in which if you don't live in the UK, but you hold UK property investments, the non-dom residence tax is going to start affecting you because now you won't be able to get this tax credit for living overseas. So now this needs to be included within your calculations for profit for that property or your portfolio that you have in the UK. Again, the landscape is changing. It's changing all the time. That's why it's so important to be looking at this budget in order for you to be up to date and to know when those changes kick in and what effect they have on your portfolio and your global picture for income and investments. Now, on taxation on property wealth, there are two important changes that you need to take into account. The first one is the so-called mansion tax, which is a high value council tax. So if you have a property which is worth £2 million or more, now you will have to pay a premium on that property on top of council tax. So, for example, if you have a property that is worth £6 million, you will have to pay yearly £7,500. Now, you will be able to accrue that and pay it later, but regardless, it's more money that you're going to own to the government. This starts from £2 million, and you will have to pay about £3,500 at that value, and then it will increase up to £10,500 if your property is worth more, about £6 million. So the mansion tax properties here. The problem is the government is trying to tax those, as they call, with the broadest shoulders, but they only going to get £4 million income from that tax, which compared to the whole budget, this is insignificant. And again, they go back to the same problem. They try to charge rich people, they try to charge investors, but then again, it's never enough, and they go back to the working people to tax them, as they have with the freezing or unfreezing, because it was already frozen, the thresholds for income tax, which will drag about 900,000 people into higher tax bands. And that's the way for the government to increase taxes without increasing taxes. Now, the second change here is the offshore structures, which is from April 2026. If, for example, you held farmland in a limited company located in Jersey, this won't be able to be done anymore, because that loophole for agricultural property in non-UK entities now is going to be. Now, in terms of commercial investment, there is a big change, which again, the government is trying to charge those with the broadest shoulders. In this case, they're basically going to tax businesses again, which is going to increase prices for the normal working people. Again, everything goes back to what they call the working people. In this case, if you have a warehouse, a commercial warehouse or commercial property worth more than £500,000, your rates, your business rate, which is kind of the conceal tax that the commercial properties pay, is just going to get a lot more expensive. So my recommendation is that look at the forecast of the business rates that you will be paying, and then include that into your financial model, because it's going to be affecting your income, your final income in your business. Now, in terms of corporation tax allowances, there's been a change or two changes. The first one, which kicks in 2026, is that now you will be able to deduct 40% capital allowance in depreciation for the assets you buy. So let's say you buy a machine, which is £100,000, then you can deduct 40% of that machine, £40,000, to get a boost in income, a boost in profits from that deduction. Now, they have done this, but also they have decreased the standard writing down allowance, which drops from 18 to 14%, which that means is now you will be able on the first year to write off a big part of that asset and use that as allowable expenses for your business. But then the years after that, you will have to use 14% depreciation and not 18% depreciation for those assets, meaning in the long term it's going to be slower, but at the beginning you're going to get a bigger boost in your expenses that you can claim. On this category as well, they introduce what they are calling the retention zones, which is areas like Leeds City Fund, which is where councils will be able to retain for their use 100% of the business rate growth they get, and that income will be invested into that local infrastructure. So if there are properties in that area, probably they might benefit from this growth, this localized growth that the business, the government is trying to achieve by implementing these measures. In terms of planning and development, there are three items that we would like to talk about today. One is social housing rent, which the government has confirmed a 10-year settlement on CPI plus 1%, meaning that social housing rent could be increased for 10 years. You'll have that security, peace of mind, that your rent could be increased in terms of inflation plus 1%, and that allows you to forecast your business in a better way. Again, if you read behind the lines or between the lines in terms of what the government wants to do, is effectively they want to minimize, they want to decrease, make the private rented sector as small as possible and increase the social housing as much as possible. Why? Because in the UK, the housing crisis is 4 million houses big. That's the size of that crisis, and that's what the government is trying to close in terms of that gap, but it's almost impossible to do it in just one government. It needs to be done over the years, but they keep failing each year in doing so. The other one is the VAT reform. They are doing a consultation to incentivize social housing, land development, and use VAT reduction as a driving force for it. And new grants have been introduced for public bodies to support land remediation in terms of if it's too expensive to remediate some contaminated land, then these grants have been created to help the local councils to make this land good and be able to build on them. Now to finish, if you are a property investor in Liverpool or Wirral and you want your properties professionally managed, or you want to invest in those areas, please give me a call in 07411 904 124, 07411 124, or info@propertycashflow. Do give me a call on 07411 904 124, or send me a message to info@propertycashflow.co.uk. You can see what we do at propertycashflow.co.uk. You can see success stories. You can see the properties we rebuild, refurbish for you, investors like you, and then the properties that we manage as well as our own properties. Please like and subscribe, and see you on the next video.